Bitcoin income sounds incredible, but what actually happens when you try to turn volatility into cash flow? This fund tries to turn Bitcoin into income, but does it actually work? If you invested into BTCI for income, here's what actually happened. So stay tuned. Welcome back to Simply Money. Today we're looking at something that sounds almost too good to be true, turning Bitcoin into income. BTCI is designed to do exactly that, generate consistent cash flow while still giving you exposure to one of the most volatile assets in the market. But here's the question most investors don't ask. What does that trade-off actually cost you? Because when you're generating income from something like Bitcoin, you're usually giving something up, upside, growth, or long-term performance. So instead of debating strategy or marketing, I ran the full backtest. We're going to break down what BTCI actually paid, what happened to the share price, and what your portfolio would look like under full drip, partial drip, and taking the income. Because the real question isn't whether BTCI pays, it's what BTCI actually does to your money. So let's get into the numbers. Here's our sheet that we look at. For those that are new to the channel, thank you for joining us. This is our all-in scenario where we take one fund, we do a hypothetical, what if you took your full income portfolio and invested it in this fund? What would it have looked like in full drip, partial drip, or no drip? And we do this amount because months ago somebody had asked me to do that, and we've continued the series using the same amount, and that is the madness behind this. We're looking at BTCI. This is a monthly paying fund. So we're going to see this paying out once a month. What we have here is the date, and you can get a copy of this sheet if you'd like down in the description below at Buy Me a Coffee. This is the BTCI drip sheet. And with this, you'd be able to go in and change the date from when maybe you bought it, and you can change the amount that you invested into it and go from there. And we've got a couple calculators. Stay tuned to the end. I'll show you those and how you can use it to customize your reinvestment plan and see how it works. What we'll do is with this amount on this date, the share price was $49.25. It was able to get us 10,660 shares. Coming down this first column here, column B, we're going to look at the share price. Again, it started at $49.25. And like a lot of funds, these ETF high yield funds, it did well for a little bit, but what happened down the road as we got into 2025, it was doing well, got up to $63, almost $64 here. But since July, it has just gone down almost in half since its high. Now, since inception, you can see here it's only down, I say only, down 32%, but Bitcoin is down. Pretty much any fund that is following Bitcoin has been destroyed because Bitcoin is down. And if you know anything about crypto, and particularly Bitcoin, you understand that it goes through these cycles. This isn't the first time. There's 3 times in the past in the history of Bitcoin, if you look at it, where it hit highs, and from its high where it dropped 80%. You heard me right, 80, not 8, 80% down. But then it recovered and came to new highs, and we just went on those tears. But then it would go from that high down 80% again, roughly 80%. It's done that 3 times. This is the 4th major cycle. It has ups and downs. It's very volatile. But having these huge drops from their high, this is the 4th cycle that we've seen where it's come down. And right now it's down about 50%, if I remember right, from its the last time I looked, from its latest high. It is crashing. And this is the cycle that happens, and people get caught in this. They start panicking and selling. If you're going to do this, I'm not saying to buy it, not buy it, but if you're going to do it, you need to be prepared how volatile this is. With the price, you can see we're in a very bad downturn, part of that market for Bitcoin. In fact, I'm actually tempted to get some of BTCI because to me, it's going on sale. I'm actually waiting to see if it goes down a little bit further, because if it follows its historical trend, it's going to drop another 20% or so, which is fine. Let it hit that bottom, and it can scoop up a few shares and let it catapult to its next new high. Will it do that? I don't know. I'm not predicting it will. Just saying if it follows the pattern of the past, that's what would happen. We know just in the time frame that we have this, it has not done well on share price. But again, we'll have to watch and see how it does. Now, with some of these covered calls, you're missing upside. So when that skyrockets back up, you're going to miss some of that upside versus if you just held Bitcoin. All right. So with this fund, we also get a very nice monthly distribution. We're going to look at those distributions and see how it's done with this volatility. Coming down this column C, this first month you got $1.12 per share. Come down, and it's been pretty consistent climbing up, and then as the share price has gone down, it's starting to come down some, but it's still above $1 per share for this distribution. An average over this time frame has been about $1.34. It is down right now from some of its highs, but it's following the share price. Its yield is staying pretty consistent. Over here, what we have is our full drip. So what we're simulating here is you get this share price. This is the dividend per share, multiplied by the number of shares you bought, and this is how much it would have paid out. And we're taking this distribution and fully dripping it back in, and we're adding those new shares right here. So you can see as you come down how many shares you're getting. I want you to see this as we go up each month, your distribution, till we peak here to about $19,000 a month. And it pretty much stays in that range for a while. It's, again, starting to drop a little bit as that price is coming down, but you're still getting 18, and now this last one, $17,000 a month. So your first 3 months, you're looking at 12,000, 15, then you got up to 18,000 when it hit the $64 a share. But look here, even with the share price down to $33, you're still getting $17,000 a month because you have added 6,100 shares by reinvesting it. And that is looking at column I. By reinvesting, you're adding more shares, and even with the share price dropping, you're able to maintain that balance a little better. So if you were to do this, and now's really a good time because you have this discount, you're getting this huge distribution, you're able to buy a whole lot more shares because the price is so much lower. And you can see over this time, you haven't done great, but you've maintained your balance. You've gained about $32,000. Now, if this thing does turn around, and even if it gains back to where it was, let alone if it goes to new highs, and you start thinking about this $1.50 per share with this many more shares, your distribution is going to be really healthy. Again, we don't know what the future is going to hold with this, but that's what it has done. And why we do these isn't to predict what it's going to do. This is strictly looking at the back test. This is historical data. This is what it has done. The amount that we're investing is hypothetical. You can change that, but it's showing you its performance. The percentages are going to be the same no matter how much you put in here. Scenario number 2, we do a 50% drip. Means we take half of the amount that's distributed, which is shown right here. This is half of what is given, and we're reinvesting it, which we're accumulating here. We're also getting this amount, so you get this, say, $6,000 and buy more shares, and you also get another $6,000 for income. This column, every time you see this distribution here, you're getting it 2 times. And as we come down, you can see that you've collected $142,000 in income, and you've also bought 2,700 more shares. Now, with that being said, your portfolio is down about $80,000, which isn't horrible considering how much this has dropped and how low Bitcoin is currently, and this follows, obviously, Bitcoin. If I was doing this and I had bought into this back then, I wouldn't be overly concerned. In fact, I'd be pretty happy with I got 142 grand in income, and my portfolio is only down 80,000. I've added some shares there. Now, a little concern though, if you were using this for pure income, this is where a lot of people say, well, I would never do that. I would take some of the income and I would reinvest some of it to help boost that up. And I'd like to see this. We'll revisit this again down the road after Bitcoin recovers and see how this fund does after that. But right now we're seeing it for what it is. This scenario is zero drip. We're just taking the full income. We're not buying any more shares. So as the share price is dropping, obviously our value in our portfolio is going to drop. But But let's see what happened at the end of this time frame. We've collected a nice healthy distribution of $250,000. So we've gotten almost basically half of our investment back in income. In the meantime, our portfolio has dropped significantly, though, $170,000. Again, now if this returns and gets back up to these highs, you could see that you'd be at a nice healthy $600,000, $700,000 balance if Bitcoin recovers well. We'll have to watch and see. But in that scenario, you would have been generating income, but you're watching your portfolio slowly decay. Overall, it's not been great, in my opinion. What are your thoughts on BTCI? Again, this isn't a short play. This is a long-term opportunity. And with anything, you have risk. This one has higher risk because it's higher volatility. Greater reward comes greater risk, and you have to understand that. Now, I want to show you this, and this may surprise you. Let me know if you're surprised by this in the comments. Go ahead and leave a comment down below, but let's look at the total returns. This is one of those funds where if you look at this, no drip, taking the cash, you actually get a better total return. So this is one where fully dripping isn't necessarily your better bet for total return in the short term. Now, long term, we don't know. Again, if this thing really takes off, this is going to flip. But because the prices come down so much, by taking the cash, you're locking in that before it gets these losses. So you're actually getting a better total return. How that works is here in the full drip, whatever your portfolio balance is, the gain, the unrealized gain, is your total return, which is 6.25%. This is about 18 months, a year and a half. That's not a great return, but it's positive. So that's a good thing, at least it's positive. But looking over here at the 50-50, now your portfolio is down $80,000. But remember, you took $142,000 cash. So that's $62,000 in the positive. You take the cash that you took and the difference in the portfolio balance and combine those for your total return, which is almost a 12% total return. Again, that's actually not too bad. That's nothing great, but I'd be happy with that considering the circumstances. Now here, this is where it's surprising to a lot of people. Are you surprised by this? If you're surprised by this, give me a hype. Hit that down at the right below the description. There should be a hype button. Help the video out and give me a little hype that with no drip, you actually got a 16.5% total return. Your portfolio is down $171,000, but you took $257,000 in cash. That's an $86,000 increase for a 16.5% total return. Now that's pretty decent for about an 18-month time frame. Again, for Bitcoin, which is very volatile, and you're looking for very high returns, that's nothing amazing. But considering we're in a really downward spiral right now, I would be very, very happy with that. So that's your total return. Do you have any thoughts on that? Leave those in the comments. Okay, let's go over to the part you were waiting for. This is where you can customize it. This is your percentage calculator. You can put in the percent you want to drip right here. If I want to drip 85% and only take 15 as cash, this is going to give me this amount of cash each month. And this amount over here is what's going to reinvest and buy more shares. As you can see with the 85-15, you're getting around $2,000 to $2,800 a month income, and you're adding 5,000 shares, and your balance is basically the same. You're down $3,500. That amount over this time frame would have kept your balance pretty much where it was while generating you $45,000 of income. And you may not like that percentage-wise. What you can also do in this calculator is you can put in a dollar amount. You say, okay, I want $6,000 a month. I need that to supplement my income in retirement. I'm going to take that amount out. The rest is going to be reinvested. No matter how much I get paid that month, I'm reinvesting the rest. And so as you come down, you can see you're still collecting a good amount to be able to reinvest. And you have collected $156,000, $6,000 month over month, every month, while adding 4,000 new shares to your portfolio. You're only down $37,000, negative 7%, which isn't bad over a year and a half. to be down that much. Again, long term, I would be concerned if it obviously kept on that trajectory. You're going to drain your portfolio, but we want to see what this does long term. But that is a nice way to say, okay, I need $6,000 a month for supplementing my income, and you can put whatever amount you want here. You just need $3,000 to supplement Social Security or whatever it is, and where would I be at? Your portfolio would stay the same, basically. You've added 5,000 more shares, and you've got your $3,000 a month income. Again, you can change this around and play with those numbers. This is the BTCI drip sheet, and this is Simply Money. I appreciate you joining me, and we'll see you next time.